Investing can feel overwhelming, can't it? Stocks, real estate, crypto, ETFs, where do you even start? Here's the good news. While the specifics of investing might seem complex, the principles of successful investing are surprisingly simple. And today, we're going to cover the 7 golden rules of investing that everyone, yes, even beginners, should know.
These aren't just rules, they're game changers.
They've been used by some of the world's most successful investors to grow wealth and achieve financial freedom. And by the end of this video, you'll know how to apply them too. Welcome to your financial freedom. This is the channel where we teach you how to master your money, grow your wealth, and achieve the life you deserve. If you're serious about taking control of your financial future, hit that subscribe button, like this video, and leave a comment below sharing your investing goals. Let's get started. Rule number 1, start early, even if it's small. The first rule of investing is simple. Start as early as possible, even if it's with a small amount. Why? Because of the magic of compound interest, the process where your money earns money, and that money earns even more money over time. Here's a practical example. Imagine you invest $100 a month starting at age 20, with an average annual return of 7%. By the time you're 60, you'll have over $240,000, and you only contributed $48,000. That's the power of compound interest. But if you wait until age 30 to start, you'll only have $120,000. That's half the amount just because you started 10 years later. The lesson? Start now, no matter how small. Rule number 2, invest consistently, even in tough times. Rule number 2, be consistent. Investing isn't about timing the market. It's about staying in the market. Many people make the mistake of pulling their money out during tough times, like market crashes. But the rich know better. They stay consistent even when it's scary. Let's look at a historical example. During the 2008 financial crisis, the stock market dropped by nearly 50%. Many panicked and sold their investments. But those who stayed invested, or better yet, bought more, saw massive gains over the next decade. From 2009 to 2019, the S&P 500 grew by over 400%. The takeaway? Stick to your plan. Keep investing during the highs and the lows, and you'll reap the rewards over the long term. Rule number 3, diversify your investments. Rule 3, never put all your eggs in one basket. This is the golden rule of diversification. It's the idea of spreading your investments across different assets to reduce risk. Here's a simple way to think about it. Imagine you invest all your money in one stock and that company goes bankrupt. You lose everything. Now imagine you invest in 20 different stocks across different industries. Even if a few perform poorly, the others can balance it out. Practical example. Let's say you have $1,000 to invest. Instead of buying just one stock, you could invest in an ETF like the S&P 500, which gives you exposure to 500 companies in a single investment. That way, your risk is spread out and your chances of success increase. Rule number 4, focus on assets that grow in value. This is where the rich truly excel. They invest in assets that grow in value over time. These could include stocks, real estate, businesses, or even intellectual property. Here's a critical distinction. 1. A poor mindset says, I'm going to spend $30,000 on a new car. Liability, it loses value. 2. A rich mindset says, I'm going to invest $30,000 in rental property. Asset, it generates income and appreciates in value. Practical example. If you buy a $200,000 property with a 20% down payment, your initial investment is $40,000. Over 10 years, that property could appreciate to $300,000. Plus, if you're renting it out for $1,500 a month, you've earned $18,000 a year in rental income. That's the power of focusing on assets. Rule number 5, control your emotions. This is one of the hardest but most important rules. Don't let emotions control your decisions. Fear and greed are the biggest enemies of successful investing. Here's how it usually goes. 1. When the market crashes, fear sets in and people sell their investments at a loss. 2. When the market soars, greed sets in and people buy at inflated prices. But the rich do the opposite. They stay calm. They buy when prices are low and sell when prices are high. Example. During the 2020 pandemic crash, the stock market fell over 30% in just a few weeks. Those who panicked and sold missed out on one of the fastest recoveries in history. The S&P 500 gained over 70% in the following year. The lesson? Stay rational. Stick to your strategy. Rule number 6, invest in yourself first. Before you invest in stocks or real estate, invest in yourself. Why? Because the better your skills and knowledge, the more money you can earn and invest. Practical example. Let's say you spend $1,000 on a course that teaches you a high-income skill, like coding or digital marketing. That $1,000 investment could lead to a $20,000 salary increase, giving you more money to invest. Compare that to spending $1,000 on clothes or gadgets. They don't give you any return. Remember, you are your greatest asset. The more you grow, the more your wealth will grow. Rule number 7, have a clear goal. The final golden rule is this: invest with a purpose. Don't just throw your money into random investments without a plan. Instead, have a clear goal and strategy. This is where financial freedom comes in. Financial freedom happens when the income from your passive investments is enough to cover your desired lifestyle. For example, if your desired lifestyle costs $4,000 a month, your goal should be to build investments that generate $4,000 or more in passive income. Practical example. Let's say you invest in dividend stocks that pay a 4% annual yield. To generate $4,000 a month, you'd need $1.2 million invested. It might seem like a big number, but if you start early, invest consistently, and let compound interest work its magic, it's achievable. Are these golden rules making sense so far? If you're feeling inspired, don't forget to subscribe to Your Financial Freedom, hit the like button, and share your investing goals in the comments below. Let's help each other grow our wealth and achieve financial freedom together. Let's recap the 7 golden rules of investing. 1. Start early, even if it's small. 2. Invest consistently, even in tough times. 3. Diversify your investments. 4. Focus on assets that grow in value. 5. Control your emotions. 6. Invest in yourself first. 7. Have a clear goal. If you follow these rules, you'll not only build wealth but also set yourself on the path to financial freedom. Remember, it's not about how much money you start with, it's about making smart decisions and staying consistent over time. If you're ready to take the first step toward financial freedom, subscribe to Your Financial Freedom for weekly videos packed with tips and strategies to grow your wealth. Don't forget to hit the like button if this video inspired you, and let us know in the comments which of these 7 rules you're going to start following today. Thank you for watching, and remember, the best time to start investing was yesterday. The second best time is today. Let's build your financial future together.